Evening, traders. So it's a little disoriented, having a little nap, dreaming about taking the big guns in FX, waking up, just slowly getting acquainted to what's going on here. Last couple hours of trading since I got home from work. Um, yeah, look, the pound was creeping higher in Asia. Now it's definitely had to go a little bit at 129. It's an interesting sort of rally. You know, it's very quiet for the pound. That's not its normal sort of status. It doesn't usually go quietly higher. Yeah, it's pretty dangerous for the bulls though. The grinding nature for the bears. Sorry, the grinding nature of this rally is the sort of thing that is creates trends rather than creates a short squeeze. And what we're looking at going forward. I mean, 130 is just an actual target, and that seems pretty close. Wouldn't take much of good news or just a little bit of weak US dollar. And where can we get the weak US dollar from? We can get the weak US dollar from that Trump tax plan. That was fairly lacking in detail. Now, we were concerned about this yesterday, that he was going to come out and just give us nothing but the headlines, and that's what we got. And the reaction was pretty negative on the dollar yen. Still stabilized, still strong. US yields 10 years are still holding that 2.3, but maybe with a day or 2 days of reflection, you could start to see the market give back some of these gains in the US stock market, and then gains in the dollar yen. And then the natural way of playing long is long pound and long euro in the current environment. You don't really want to be long the Aussie. You don't really want to be long Canadian dollar or New Zealand dollar either. You want to be long something else against the US dollar. Now, I don't usually sell dollar yen, and the euro trade makes much more sense to me. So if you're looking at a trade which sort of has got technicals behind it and is got a lot of potential to the upside, then both the euro USD long and the pound USD are both pretty good trades here. And I suspect there will be some Trump disappointment to be played through in the next 48 hours. Now, what is complicating this is, in the background of that, we do have some movement on the healthcare bill. The original Trump disappointment is potentially getting a second run in the next 2 days as well. And if that gets passed, then perhaps that's a little feather in his hat, and the markets will be able to continue the risk-on rally as he starts to get things done. But that still has to get internal debates. The people he's got on board are the original negative group. The Freedom Caucus is what it's called. But now he's lost support among the more moderate Republicans for the bill with the changes he's made. So he's got a bit of rustling to do. We're going to quickly change from talking about the tax plan to potentially talking about the healthcare plan. In that scenario, maybe any negativity is going to get sort of capped in the dollar yen, and that is the danger to this trade, because US dollar strength coming from dollar yen spiking higher will sort of cap the pound and the euro rally. But that's still speculation, and he's still got a lot of work to do to get that result. I suspect the more normal result's going to be tax plan disappointment and more negative headlines than positive headlines regarding his tax plan. I mean, the straight up headline is how is he going to pay for this? And it's not currency, it's not revenue neutral at all, and it's some huge drops in tax cuts that he's talking about. And you can imagine over the weekend there being negative sort of headlines, economists coming out saying this is not how it works. You can't cut interest, you can't cut tax, get more people paying tax and that cover it. It just doesn't work like that in any other historical test. But we'll have to wait and see if the market turns on this, then and suggests it's not going to be done, or it's going to be just the opening numbers that he puts out there, but the real numbers are going to be much higher that he can actually get through, then maybe some of this Trump rally on the back of the tax plan is going to get unwound fairly quickly. Now that case really to me puts the dollar yen back towards 110. There's still reasons to be positive just generally with post-French elections and easing North Korean tensions. But even a move down to 110 on the dollar yen probably coincides with the euro testing 110 at the same time, and that's sort of my base case of what's going to be happening here. So the ECB tonight is the big event for affecting our euro. I haven't gone ahead and entered a long euro. I don't really recommend you follow that unless you're really as bullish as I am on the euro. I want to get exposure pre and I want to get exposure after, and I'm happy to risk a few K here on that trade. So the euro trade is long at spot, long on a dip, towards 108.50. If he can manage to talk down the euro and stops below 108, I'm happy with that sort of setup. No, I didn't record it. The Sky News interview, so I can get it from them, and just generally we were thinking about this at work. Get it from them just for promotional activities. It's quite expensive to get sort of the clips and to get permission to use them. A bit more expensive than you would think. Yeah, welcome, boys. If you're watching this on YouTube, then the main chat where we do all this is at forexsignals.com. Come across if you want to speak and talk, ask me to look at particular pairs. Otherwise, you're not part of the conversation. There's currently 132 members right now watching and talking. And that's really where you can catch me if you want to ask questions. This is pro real time. These lines are all drawn automatically. I don't mind it. I mean, some people turn this stuff off. I don't mind it at all. It's auto drawn, so obviously not precise, but they're okay. I like the way they try to make lines of best fit in most of the pairs, and it just helps you see channels, helps you see growing supports and resistances, because they're pretty good at that. Alright, so Shay Baby, in regards to gold, you can think of gold as very much the opposite of dollar yen. So if dollar yen goes lower on the back of the tax plan being underwhelming and concern about it getting passed, that's dollar yen down to 110. That's gold back towards 1275, 1280 at the very least. It's probably not good for gold to 1300 on the tax plan issues. It's not really super risk off sort of news. Because it is still a really big tax plan announced, it's just there's no detail, right? But if you're talking about logic, right? The logic is that the tax plan's caused a nice spike in the dollar yen, yeah, the lead up to it, right? The lead up to it's called this nice spike. Okay, so the spike is on the back of everything's going to be, these are major announcements that are going to help the US companies and lead to the Fed raising faster, right? That's good, and the numbers given out do support that idea, but the lack of detail means that you can't buy on the back of that plan very easily because there isn't too much else to go on. Those numbers were sort of leaked earlier, the 15% and the 10% repatriation tax, so we got that, but we got no idea how he's going to actually get it done. So to me, you can't really buy on the back of that tax announcement because we haven't got enough detail. If you can't buy on the back of it, then the door is open to sell on the back of it. That seems a path easier here. I wouldn't be buying on the back of that tax plan here at all. I'd be buying maybe at 110. Just, because in theory it's good what he's trying to do for the US dollar. It's just let the disappointment come in or the lack of detail lead to a washout first. and then we can start to see how serious it is. But yeah, in theory, if he got all that pass, that's dollar yen 120. That's crazy sort of stuff that he's sort of suggesting. So it is supportive, but just short term, I don't think you can buy on the back of that tax plan. Therefore, selling is easier. And so the door opened for the euro to rally post Draghi here. I suspect we're going to get that rally post Draghi. Eurozone yields have increased too much, and I don't think he can talk them down successfully today. But that's part of my thesis here on what's going on in the market with the euro. I don't think it's something that you should be too look, post French election risk on euro. I think there's enough reason to be just bullish on the euro anyway. But those who are waiting for Draghi, that's probably better. Yeah, wait for Draghi. Don't have to enter straight away. Let's see what he has to say. Yeah, he's the original dove if it comes through. If you're talking about someone who's jawbone for a living for 4 years, it's Draghi, and so he's pretty successful at it. This is Pro Real Time. You can go buy them from Pro Real Time. You can get them for free from IG Markets if you trade with them as well. He's no dove, he's a pigeon. So if you're talking about the ways of playing euro, US dollar makes sense to me because I do suspect there'll be some US dollar weakness. But you can play Euro Aussie. That makes a lot of sense. That's a nice trade as well. You can see it's trending nicely. You can play Euro Yen if you suspect that risk is going to remain on and everything's going to be okay when it comes to Draghi tonight. To the tax plan, because the Euro Yen's a faster way of playing dollar yen. I'm probably not going to play Euro Yen just yet. There's some big resistance coming here, and I'm not. I don't feel like dollar yen has that legs right now to get there. So that's I think focusing on the Euro USD is fine. If you're talking about the US yields, they broke back about the 10-year 2.3, and then after the announcement, they fell back. But they fell back to 2.3. So I haven't looked at them for a couple of hours. Ooh, just on the level. Just on the level. So post the announcement, it's pulled all the way back to this level. This level's key. What happens today is critical. Since there's cloudiness in the outlook, I don't think you can be bullish. Yeah, I don't think you can be. Oh yeah, for sure, dollar yen's going high. Right? If you don't get that feeling, I just don't know why you want to commit money on that trade. You can easily build the case for the euro going higher without any news, without anything new at all. I like that sort of thing in the back of a trade. Yeah, so we really, what was going into there is how do you select a pair? How do you select a pair to you find a currency you want to buy, then you go through all the different currencies you can sell against it. Euro Aussie looks really nice though. Pound Aussie looks really nice too. We talked about Pound Aussie a fair bit as it started to grind higher. It's a very popular cross. And the room to the top side is fantastic, right? But I didn't get an entry. I didn't get a good pullback. I didn't get, it's not on my radar enough. You have multiple screens, right? With different. I've got another screen here. The crosses, the Pound Aussie, because Aussie's not moving much. The Aussie crosses aren't really on my radar, so I haven't really been watching it. But it's every day I went, every 2 days or something, I went to look at it. It was just another 100 points higher, and it was always looking like a good trade and makes sense. But now it's a little bit too far gone to start playing with it. It's probably going up towards 180 though. Now Aussie dollar did break below its key support overnight, so it hasn't done that's multi-month lows, similar to the way the Canadian dollar was falling and New Zealand dollar was falling to fresh year lows. Aussie dollar's still got a fair bit of room to get to its year lows because it started the year all the way down at 72. But you're starting to get this talk in the market about yield compression. So UK yields, European yields, US yields are increasing, and New Zealand yields and Australian yields are staying the same. So the difference, the carry, the reason why we even buy, Kiwi and Aussie is disappearing. And so it's natural for the market to be selling, and they're selling Aussie against most crosses, everything except for the yen. The Aussie's getting sold on. So in that environment, it's very hard for the Aussie to come up for breath. But we haven't seen a breakdown after that break below here. We haven't seen that heavy selling off. Usually the Aussie sells off aggressively if it's on the back of risk off stock market risk or China news. This is something new. This is just trending down on the back of European yields and US yields rising. But it can definitely lead to some to a trend lower. But the speed at which it's moving, 30-40 pips a day, is not enough to get me excited about it. Yeah, I don't want to be trading that pair. The buy limit on the euro is the same buy limit we had from yesterday. It's a 108.55. Just a little bit above 108.50. It wasn't filled, nearly got filled. It was a pip away, 2 pips away on the dip, but we didn't get filled yesterday. I would have just taken profit then re-established, probably. But it's fine. So the stop is at 107.50 and take profits 109.80. So look, basically we're looking for a 110 test in coming days. Yeah, gold can't go higher unless dollar yen starts to fall. This disappointment with Trump trade hasn't really begun yet. That's not on. That's something which might happen, is happening. The slight pullback that we saw last night is more what you'd call buy the rumor, sell the fact. I'm talking about a couple 100-point drop in the Dow after Republican XYZ says we cannot support that tax plan. You know what I mean? Like, that's where you get the negative headline. That's where gold goes higher. That's where dollar yen goes lower. And I think there's a strong chance of that. And I don't want to be part of the market where that's a chance. So if all that makes sense, let's have a look at some of the research out there. On the note of the Aussie dollar, we do have a bit of information. SocGen put out a little about these yields. Everyone's talking about them. Let's have a little bit more of an in-depth look at what we're talking about there. Yeah, so the tax plan released last night was a 1-page bullet point. Yeah, it was hilarious. It's hilarious. The greatest tax plan in history, the biggest tax cuts in history, was the title of it, and it was just a 1-page bullet point. Yeah, okay. Alright, so Euro USD may pause until yields catch up. Yeah, so yields have started to move. They haven't really moved a lot. And you're starting to get an increase there in terms of the bounce, but ECB is going to try and cap that. I want to buy that dip, whatever dip we get today. Unless it breaks 108, then I'll be sit to the sideline for a second until we get more strength. Also, big news in Asia. Of course, we talked about it in the room if you were trading it. Trump came out saying he's not going to withdraw from NAFTA. I had a chat with the Mexican president and the Canadian Prime Minister, and so he wants to renegotiate NAFTA. Doesn't want to cancel it. That's led to Canadian dollar, falling sharply because it was sort of it had been getting wrecked for a while. So it had broken fresh year highs, and so the market was really digging on for it. And in theory, if NAFTA had happened, if he'd cut NAFTA, then it would have gone a lot higher. So I can understand why the dollar CAD was where it was when he got that differential. You got that market taking out stops, trailing stops. Since then, there's been secondary buying. Yeah, but got to be careful here. Got to be careful here. These are pretty high levels that you're buying dollar CAD. The trend is nice, but that was pretty positive news to come out. That maybe there isn't going to be this this trade war between US and its trading partners. It's just more of a negotiation tactic. So, yeah, be careful. That's headline-driven stuff, right? That really messes with your technicals if you're trading something which is potentially going to move 100 points on the next headline. C and J file, you're talking in caps there, mate. That's shouting on the internet. Now this is a problem, right? I talked to you about yesterday how everyone has the same idea, buy the euro on dips. So I don't know if we're going to get that nice dip. That's half the reason I'm in straight. So if you want the new trade is just to get a little bit of exposure on the euro against something before the ECB announcement. Because this trade has been talked about in so many different, outlooks. They may acknowledge upside risk, but want to keep policy on a steady path. Euro, USD, USD may pause today, but any pullback is a chance to buy. Yada, yada, yada. Everyone thinks the same thing. If you're not long euro, you want to get long euro. As these yields and the ECB eventually does change. Well, these guys are positive on Aussie. They think there's no case for it to fall further. I don't know about that, SocGen. I don't know about that. It's definitely some unease. Technically, there's not much support here. Alright, is Macron priced in? So we're talking about next week, right? Next week, at the end of next week, there's another French second round where it should be quite an easy win for Macron. Yeah, it's priced in, but it doesn't hurt. Yeah, it doesn't hurt. So you can get the market to continue higher. The euro should, if it's above 110, that's going to be a good position for it to continue to rally. Sort of when the market's in an uptrend, it looks for good reasons, and sort of confirmation that Macron wins is probably just another little reason to buy, a small reason, but nothing crazy. It's definitely not a reason to sell, right? We're not really buying the rumor here, selling the fact. It's the fact is European elections so far this year have shown that they're not swinging to the populists. Yeah, that's really good for stability and forming outlooks and investing in the countries, and to get a outlook for the economies, and for the ECB to eventually start raising rates or ending QE. Do want to have a look at little Deutsche Bank update on dollar yen. Let's see where they're at. At the BOJ today, you could be forgiven for not knowing that, because it is not a big event in the markets. We had a slight increase in its forecast for 2017 CPI and a slight upgrade to economics outlook. CPI is expected to get to 2%, their target, or close to it, 1.9 in 2019. Alright, we see various factors that prevented dollar-yen longs positions in April starting to fall away. These include concerns over feasibility of Trump policies, weak US indicators, low expectations for Fed rate in June. Alright, so they expect in May to see progress on US fiscal policy, gradual improvement in US indicators, and expectations for a June rate hike starting to raise again. This is what we're going to be talking a lot about next month. Is the Fed going to raise in June or not? I think the chances are 50-50 at the moment. Yeah. That's a lot of room to move either way. Yeah, that's a big move for the US dollar either way. If it drops to zero because, you know, Yellen comes out with this major negative speech, or just dovish speech, delay speech, wait and see speech, then yeah, that's short term pretty, you know, too big figure move on the US dollar and all the pairs. If she talks up the chances of it, you know, they make it pretty clear, don't they? They made it pretty clear in the March meeting, and they can definitely make it pretty clear if they want to that they're going to raise in June, and they'll start doing it in the weeks leading up to the announcement. I think it's the stream tonight is coincides just before or just after Jason will be streaming at 11:45 my time, which is just an hour after that press conference. So he'll give you a good update on it. Look, it's not really a live event, so basically I can tell you what to expect. Draghi's going to try and talk down the euro, trying to cap the recent rally in the yields, and the market may dip down a little bit, and that's a good buying opportunity. If he fails in talking down the euro, then we could be on our way to 110 tonight. If he comes across as starting to be constructive or slightly hawkish. It's not the takeaway from that is the euro is unlikely to just go sideways. Yeah, he can either be successful in talking it down or it's going up. Yeah, in my opinion, I'd be very surprised if tomorrow at the update we see euro just at 109. Yusuf, you can get them from the FXWW chat room. So FXWW, it's just for bank reports basically. It's around $50 a month. There's a few different sites out there giving access to bank reports actually. I mean, you don't really need it. You can just come here. Hey, hey. You know, I give you a fairly good macro, you know, sort of update each day. If you're a technical trader, you could probably just do with 30 minutes of me ranting to you about what's happening in the background. But if you want to be a fundamental trader, if you really want to get down to the nitty-gritty of all these things happening in the background, which, you know, I like to do, is it's nice. It's nice to get, you know, different perspectives and the arguments for both sides. It's not like economics is crazy, it's just a big debate, yeah? So there's no conclusive outlook of what's going to happen. Yeah, so apart from the pound, there's not much moving right now. Let's check the latest there from Deutsche Bank Jim Reed, and then we might finish up with I mean that we might finish up with this one. Details remain vague in this one-page document, especially on the costing side, and as we know, unless it's budget neutral, then all we may get is a temporary tax cut for a decade. Alright, so such a temporary cut could still boost short-term activity, but at what point would worries about the deficit kick in? So, you know, they've got $20 trillion debt deficit over there in the US, right? That will definitely start to increase if they do all these tax cuts without getting extra money. Alright, ECB. Consensus remains to be no change of policy rates. DB rate strategist reiterates his view in a note yesterday. Noted despite market-friendly outcome of the first round presidential election, the ECB is unlikely to indicate any change in its policy stance as yet. Still limited evidence of self-sustaining improvements in underlying inflation. The House view is that the forward guidance is set to be adjusted in June. Alright, so that's where, you know, the ECB in June, along with the Fed in June, are two really live events now. The ECB talks about the, you know, the tapering that's coming soon, and potentially rate hikes in December. Jesus. Then, you know, that's what gets a euro going towards 115. You know, big rally. But yeah, we'll get it probably. You know, what I'm interested tonight in is the question time for the ECB. Yeah, because you get those journalists who ask them these sort of questions. What timeline is the ECB thinking about starting to taper? You know, are you looking at raising rates anytime soon? Yada yada. Are you concerned about inflation? And you know, anything could be. His off-the-cuff remarks might be come across as hawkish, or the beginning of the end. That's what the market took away from the last meeting. Yeah, that it's over. The QE's coming close to an end soon, and so let's start buying euro now. Or let's start selling eurozone bonds now. Alright guys, well good luck. I might be in the room later. I'm not 100% sure. I do have to sleep at some point. But I am interested in trading this event. I'm pretty happy to trade it blind, but that's not the safest option. It is better to watch just in case he does somehow orchestrate a move on the euro down below 108. It's probably better to be there watching what he says. And you know, perhaps the market gives Trump the benefit of the doubt, and dollar yen can rally, and the tax plan continue. That would add to the US dollar buying. So there is ways in which euro can go lower. I'm not going to lie to you, but it does seem hard to orchestrate that today. All right, good luck, guys. I'll be back tomorrow. We can review the carnage and how the market plays. So same time. Good luck.